Thank you, Captain Obvious. All right, we're live. Good morning, we're live. Happy Friday. It's October 4th, 2019. It's almost Halloween. And yeah, we've got, in fact, just before Halloween, I think it's October 25th, we're going to do scary bookkeeping stories. So I need you to gather up your stories. Just write up a little paragraph or two on some of the scarier things that you've seen over the years when you've looked at people's books. I had one this week that I looked at. An e-commerce guy. I've been trying to get his, work with him to get his books cleaned up. He can't really afford to just pay me to do it, so we're doing it under kind of a training venue, where he just pays for the support and I log in remotely with him, which is how I actually still bring in most of my revenues. And as I'm looking, I see, he's got accounts payable on the books, and he's like, there shouldn't be any accounts payable. I'm like, okay, let's go take a look. And we look in there, and among other things, there's a series, there's a payable from like an Amazon.com something vendor, and they're all actually deposits into accounts payable, which they had done, I guess, because of some credits that Amazon had given him back. And I don't know why whoever was doing his books before. The scary part is he told me it was a CPA who was doing his books. And this is the stuff that they did. It was clear, and as I've picked the books apart and found this and things like it, it became clear to me that whoever was doing this clearly just had no idea what they were doing. And I guess I feel like it would be just so much better if people would just be humble enough to admit that and say, you know what, I don't have the experience. I don't understand how to do this. Let me either call on somebody who does, or just say to the client, look, I'm really sorry, I can't help you. But to try and pretend like you know what you're doing and then try and figure it out and make a mess of it along the way, you're doing everyone involved a disservice, right? Now it's costing the client a lot more money. He's late filing his 2018 returns because of this, because he's had to learn how to clean it up, and he hired me, be after the last minute really, to help him do this. And luckily he'll be able to finally file, by next week with the help I've given him.
I think you can file this under, you get what you paid for.
I don't even know. He might have paid a lot. It was like I said, he told me it was a CPA. I have no idea what he paid them. It's just, again,
I'm gonna make a guess and say that he went with the lowest bid.
It's possible. It's likely, right? It's also the guy, super nice guy, probably really good at what he does in terms of selling his products on Amazon, but he has no concept of this accounting stuff, right? And so he's just trying to wade his way through it and struggling at doing so. And actually, he originally found Hector, and then Hector referred him to me to help him with the cleanup, and Hector's going to get his taxes done now. So, which is, by the way, it's really cool working with colleagues like that we have. I'm excited. This is the first time I've ever worked with Hector in this way. We've done like webinars and things together, but it's really cool to collaborate with him on an actual accounting client. And, so I really appreciate that. But yeah, so Friday the 25th, we'll have scary bookkeeping stories. We'll share more like what I just shared with you. So bring your stories, get ready, bring your Halloween masks and costumes, and we'll have a lot of fun on that Friday. Also coming up, we have next week we're going to take another look at ClickUp, because now ClickUp 2.0 has been out for a minute, and they've made some changes to the interface, and I like them. Greg, you've been playing with it. Did we lose Greg? No, there you are. You moved around on my screen.
I don't want to be the numb guy.
You moved over to Jan Brady's spot.
No, he's the numbs guy.
He's the numbs guy. So, Greg, I know you've been playing with it for a minute. Matthew, do you play with ClickUp much? No, because you have like Microsoft Teams and you have Process Street. So I don't think you use ClickUp, do you?
We're about Click. We haven't gotten to Up yet, but we're starting to.
Perfect.
I've been playing with the 2.0.
And what do you think so far, Carol? Just real quick, like 30 seconds.
Love it. I just had to unhide my custom fields from 1.0.
Oh, did they automatically get hidden?
Yes.
Oh,
and you just need to click the little plus sign, because I had those beautiful, colorful charts for the app tracker.
Yeah.
And I just had to unhide them, and everything is there, and you can drag and rearrange them, and I'm loving it.
Yeah, I love it too so far. So we'll take a good look at that next week. We'll look at some of the changes, and we'll take a look at how, anybody who's using it will have an opportunity to kind of show us there. It'll be show and tell. You can kind of show us what you're doing with it and how. So just be prepared, create like some kind of a custom project so you don't have to show client information, and be prepared to show us what you've got. Then 2 weeks from today, I have John Ferrara coming back. We haven't heard from him in a while. And we're calling it Smart Contacts with John Ferrara. John is the creator of Nimble. Before that, he founded Goldmine, which was really like the original CRM. And if you've never seen him before, I've had him on these Friday calls many times over the years. He's just amazing to have on. I even had him join me on stage at QuickBooks Connect one year. He came up just to sort of co-present with me. We were talking about really sort of social networking and, how to kind of establish and then nurture relationships with people, and with frankly the right people who can really help you build your business and whom you can of course help in kind. And they've made some serious overhauls to the contacts area of Nimble, which I also love. So we're going to take a look at that, and we're really just going to have, I think, a big picture fun conversation around how to build relationships. That's really what it comes down to at the end of the day. You want to build your business. The key to doing that is building relationships with people. And then we'll have scary bookkeeping stories. So that's it for the month of October, what we've got coming up. The other thing is, most of you probably already know, we finally officially completed the release of Bulletproof Bookkeeping with QuickBooks Online. It is now being sold at full price at $997, and I think it's still worth 2.5 times that, easily. And it's exciting now because now that we do have a lot of people signed up, our Bulletproof Bookkeeping community has gotten very active. We've had a lot of people in there this week posting comments and questions, and I've been in there posting replies. Haven't been posting much anywhere else on social media this week because of what's been going on personally, but that I've paid attention to, and I got to say I've really enjoyed it. I love the interaction. I love the idea that I've created a resource where people can come in and not just take the course, not just watch the videos and read the write-ups, but where they can come in and say, hey, I have this very specific question, and I can come in and I can answer that detailed question for them and give them the answers they need so they can, get done what they need to do. So there was even this week an in-depth conversation I had with somebody in there that was around nonprofit accounting, which is not my forte, I'll be honest. But he had posted a link to a write-up in the Intuit online community that explains how to do in-kind donations. And he wanted me to kind of look at it and clarify if I thought it was the right and best way. And after going back and forth with him a bit and kind of looking at their instructions, I said, yeah, I like how they're doing this. And, he needed some clarification. He set it up, he thought according to the instructions, but it wasn't working right when he ran the reports, right? Again, the reports are so important. And I was able to I had to actually take a second look myself and see what was, sort of missing. And I was able to give him the clarification he needed. And you can see in the thread, if you go in there, it was like throughout the whole day, like I would comment and he would comment, and it went back and forth, obviously just in between other things, I'd jump in there and post the replies. And so all that was to say, I'm having a lot of fun with it, and I'm excited about the resource that I've created. And I hope those of you who've signed up, will feel the same way. I hope you'll use it. And I hope if you haven't signed up that you will sign up, because I really think it's, I think I can confidently say that I believe it's the best resource on the internet for those who want to learn or improve bookkeeping and accounting skills. And as you saw at the release party, it goes way beyond just basic bookkeeping. I teach you Excel, I teach you apps like SASANT and how to get transactions imported into QuickBooks Online, various ways of doing that. So again, I think it's the most robust resource on the internet today. And it's going to keep getting more and more robust. I've already got lessons I'm going to add in based on some of the questions and feedback that have come in through the community. I guess I hadn't really done anything explaining how to deal with customer deposits. So I'm going to add a whole module just on customer deposits, how to record them when you receive them and how to record them when it's time to use them and apply them to an invoice. So that.
Now, Seth, I know you don't ever get any chargebacks on your course, right?
No, I haven't actually. I've had literally one request for a refund from somebody, and I gave it to them, of course, no questions asked, and because they basically said it wasn't what they thought. They thought it was going to be more advanced stuff, and it's like, no, this is a core bookkeeping course, And I think as far as those go, it's pretty advanced, but they were obviously looking for more like analytics and business valuation kind of stuff. And that's coming. That's another course I'm actually going to roll into the new site from the old site that I had already done, but I plan to update it and improve upon it. So anyway, speaking of chargebacks, because that is the subject of the day, I don't know who requested it. I realize it's not sexy, probably, to talk about chargebacks, and I think the number of signups we had this week are reflective of that, but I think people are about to miss out, and I think you'll agree, because I have some things I want to share about it. Some things I learned early on about chargebacks that are very, very important. First of all, let's be clear and explain what a chargeback is, because there may be those out there who aren't 100% clear. Sometimes I think I know something, and then I hear somebody explain it, and I'm like, oh, I didn't know that. So maybe I'll have some nuggets to share with you today. So first of all, let's be clear. What is a chargeback? What a chargeback means is, first of all, I've gotten paid by somebody, right? That part has already happened. I have already received their money, and specifically, it has to have been by credit card, right? Chargebacks are specifically related to a payment that you've received by credit card. You can't issue a chargeback on a check you've written, right? Doesn't work. So chargebacks, again, start with the fact that I've received money from a client, presumably in exchange for some kind of value, right? Either I provided a service or they paid me in advance, which means I'm going to provide a service. So one of my first jobs in public accounting, we had to deal with this quite a bit. There were a lot of chargebacks issued by customers at this company. And what I realized over time there was a lot of people, first of all, I think some people were frankly unscrupulous, and they were just trying to get their money back, even though they definitely legitimately knew that they had received the value that they paid for. And then there are those who maybe just didn't understand it, didn't or maybe they really didn't feel they received the value. Maybe they felt they were overcharged. Again, chargeback is the wrong way to deal with that. The right way to deal with that is to go to the company that you've paid or the vendor that you've paid and explain to them that you're not happy. But some people don't want to do that, so they just go and issue a chargeback with their credit card company. And what happens then is the credit card company is going to review it, right? And they're going to look. And bottom line, if you don't have a document with the signature on it that confirms what they paid for and that they've authorized that charge, you're likely going to lose that chargeback, right? The credit card company, absent that, they're just going to take the money away from you and give it back to your customer. And, and that's a big problem actually these days, because we do so much online where, no, we're not getting a signature, right? They're going to fill out a form, checking out in a shopping cart, and then they're going to pay, and they're going to get some sort of a confirmation. But there's no actual signature from them authorizing the charge, right? And that's on that basis alone, we often lose these chargebacks or these disputes, right? The credit card companies will usually give us a chance to confirm that it was legitimate. I've had this happen a couple of times over the years, honestly, very rarely in my case. I think I'm fortunate in that, or maybe it's just that I've done a really good job in explaining to people, and making sure they understand what they're paying for before they pay for something. But there were cases, especially with PayPal one time, I was pissed because somebody had paid me for some one-on-one sessions. I'd provided those sessions, and then they issued a chargeback. And so what I did was I actually took, I record all those sessions. So I linked to the videos from the recordings of the sessions and sent those into PayPal and said, here's the proof that I provided the service that they've paid for. And I paused for a minute thinking, well, they didn't, these videos have their private financial information in those videos because we were reviewing their QuickBooks stuff. And my next thought was, too bad, they shouldn't have issued the chargeback. If they acted in good faith, I would have handled it very differently, but this was clearly bad faith. And so I said, screw them. I need to do something to prove that I provided the service. There's no better proof than a video, a recording of the actual activity. And so I sent them into PayPal, and I won the chargeback. They gave me the money back. So that's essentially what a chargeback is they've paid you for the service, and now they dispute it. And if the credit card awards them, the chargeback, then they take the money away from you and give it back to your customer, right? Here's where the trouble really starts, though. There's a lot of customers who, when these chargebacks, think at that point that they've won, right? And the truth is they haven't won. They won that dispute. The credit card company has given them the benefit of the doubt and given their money back. But from my perspective, as the vendor who got the chargeback issued against me, guess what? All that means is I'm going to reverse that payment on their account and show it as a receivable. It's no different than an NSF check as far as I'm concerned. The money went back to them. They now owe me the money. And now I'm going to make efforts to collect. And if need be, especially if I think somebody's done this in bad faith, you better believe I'll unless it's like a really small amount of money and it's just not worth it, I will happily send them to collections, right? And say, go collect, because at that point, it's worth it. Plus, they get blacklisted. I have a list of people, luckily it's not very long, but a list of people who've done this to me, so that if they should ever come back into my door, no matter how long it's been, they're basically blacklisted. We will not do business with them unless they pay upfront and by check, so they can't do a chargeback, which means they're going to have to wait a long time before I can start any services with them, because I'll need to get the check will need to clear, and I won't even consider doing a session with them so much as a phone call until those funds have cleared in my account, so that they have no recourse on that, right? That's, if I'll even do business with them, that's the only basis on which I do it.
Hey, Seth.
Yeah.
Real quickly, I wanted to make a quick distinction on chargeback also, that it's a different aspect, but the word chargeback is commonly used also in like e-commerce, or when you're dealing with larger companies like Walmart, where if you sell your products to a big company like Walmart, they will do chargebacks on that account. And that's where I most commonly hear that term. It's the same idea for like if spoilage with produce, everything else. So I just wanted to real quickly draw attention to that. In case anybody's like watching the video, they understand the difference of size of the company and the use of how we're talking about chargebacks today.
Right. Shannon is saying that she's had a check reversed 45 days after it was deposited and cleared. I don't know how that's possible. Like,
just talk to
once a check's cleared, it's cleared. Yeah, that's strange. I would definitely be fighting that with the bank, though. She says she can't unmute. I guess they disputed it with their bank, you're saying, and somehow their bank awarded that to them. That's really strange to me, that would even be a thing you could do. That's something I can honestly say I've never had happen, and I don't get checks anymore from anyone. But anyway, bottom line, if somebody really wants to do something like this, they'll find a way. Shannon, did the bank give you a chance to like prove that it was legit? Interesting. I would definitely close my account with that bank after something like that. Did you? She did. Good. Yeah, definitely wouldn't want to do business with a bank that's not there protecting me from exactly this kind of thing. Anyway, so how to record it in QuickBooks Online is going to be very much similar to recording an NSF check, right? So let's take a look. I'll share my screen in a second. I just want to get this set up with the right company. Let's go to, I think we've been picking on RN Target Inc. these days. The one thing you never want to do is you never want to issue a chargeback to John Wick, right? That's a really bad idea, right? If you've paid John Wick, and especially if he has delivered on the service, that's not a guy you want to issue a chargeback to.
But he only pays in coins. People keep forgetting this. There's nothing to charge back. He pays everything in coins.
Is it Bitcoin?
It's a Wick coin.
A Wick coin. I like that. I like it. All right, so here is what happens. Let's kind of just walk through the accounting on this really quick. I'm going to create a new customer. And we're just going to call it, should I let Intuit know my location? You know why they do this? Because when you start putting names in here, it'll look up local companies with those names. A few people have told me that they found this to be highly inaccurate. I've actually found it to be pretty accurate.
It's from Dun & Bradstreet. So whatever you actually put, whatever Dun & Bradstreet has for you, whether you gave it to them or not, is what will show up there.
All right, so they don't have me, unfortunately.
They have Parkway. Oh, no, you've got to put it in the company name, not the display name.
Are you sure?
Yep.
All right, let's try it. Nope, they don't have me. All right, Parkway. Yeah, there it goes. All right, but we don't want to use you guys in this example specifically. This is going to be called Bad Faith Incorporated. And we're just going to put that straight in the display name. Okay, so we're going to invoice Bad Faith Incorporated, right, just to get the initial kind of transaction down. Okay, we'll invoice them for a hit for $5,000. All right, and we'll say save and close. Okay, and then we'll get a payment on that invoice. Obviously, the payment method would need to be credit card, right? And then we'll just put this right into Continental Bank.
Seth,
What? Yeah.
Seth, people can also back out on ACH, right?
I mean, I guess it sounds like, especially from Shannon's experience, that you can call your bank and dispute anything, you know. And then it's just a question of whether the bank does their proper due diligence in giving the vendor a chance to prove that the transaction was real, right? It sounds like Shannon's bank did not do that. So Shannon went to a different bank, which is exactly what I would have done. Save and close. All right, so now we think the transaction is closed, right? It's done. We got invoice, you know, we invoiced them, they paid us, it's over, right? And obviously the other moral of this story is obviously you want to make sure, especially when we're getting payments online from people, you know, that we have as much as possible by way of proof that, you know, that we actually provided the service that they've paid for and that they've actually agreed to it, right? So in other disputes that I've had, I had, you know, I worked with Cocaine Anonymous, which is a nonprofit. And years ago, they did an event. I was the treasurer. And there was somebody who disputed the amount for the tickets they paid for the event. And in their dispute, it was through PayPal, they claimed that the event was, quote, not as described, because they claimed that they were told that some very famous musicians were going to be playing at this event, like Steven Tyler from Aerosmith and others. And you know, and they claimed that they were disputing it on that basis, that they were promised that these bands were going to be there and they weren't there. And what I did was I took a copy of the flyer from the event that made no such promise, and I uploaded that to PayPal, and I said, here's the flyer. This is what was promised. We promised there would be music. You know, any rumors of people like Steven Tyler playing at an event like this were nothing more than that. They were just rumors. They were not promised to anyone in any way, shape, or form. It was not on the tickets. It was not on the flyer. And based on that, we actually won the dispute. They gave us the money back. So just having the documentation that you need always at the ready, so that if somebody charges back something, you can easily prove that it was legitimate even without an actual signature on that actual transaction. That's why, by the way, having one of those letters that just kind of give you an open-ended ticket to just charge their card every month, those don't hold up that well in a chargeback dispute. They do not. What holds up well is a document that authorizes a specific charge. You know, so.
Can I stop you for just a second?
Sure.
Alexa Gregory says QuickBooks Payments will do that in an ACH deposit. Then turns out the client bank returns it and they put it back with a fee.
I'm not sure I understand that. QuickBooks Payments will do what? They'll let the person charge it back?
That's the way I'm taking it.
Okay, and so then because what often happens, like with PayPal, if they take the money away from you, they give you back, not all, but most of the fees that they charged you on the original payment when you got it. And then if you win the dispute, they just give you that net amount back, if I remember correctly. So maybe that's what she's saying, is that QuickBooks Payments does the same kind of thing, that if they take the money away from you because the person's winning their charge back, that they take it away but give you back the fee. I don't know. I'm not sure I follow.
I'll let you know when she
In
responds
most
back.
scenarios,
This
if
is
there's a chargeback, the money goes away, and then like from the person being charged back against, and then you have to fight to get the money back.
Right. Yeah, that's what I'm saying. So when somebody issues a chargeback with PayPal, I'll just use as the example, as immediately when the chargeback is sort of reported, they take the money away, and then you have to prove that it was legitimate, and they give you the money back. But when they take the money away, just as when you do a refund with PayPal, PayPal gives you back a portion of the fees that you were originally charged when you got the money. Right? Normally, PayPal pays you $100 and they deduct $3 as a fee, whatever it is, right? So now, whether it's a refund or a chargeback that was issued on that $100, they will give you back like maybe $250 on that $3 fee. They don't give it all back. They keep some of it. So now Alexa says, example, the client entered the account number incorrectly. You receive it, then pull it back. Right, I get that part, but I don't understand what you're saying about that it then turns out the client bank returns it and they pull it back with a fee. Are you saying they charge you a fee when you lose a chargeback? Good morning, Linda. All right, we'll come back to that to see what Alexa's saying. But back to the accounting, right? So now let's say that Bad Faith Inc. actually comes in and issues a chargeback, right? What's going to happen is the bank's going to take the money away. There's going to be a payment out of our bank account, whatever that, so our merchant account that we use to process credit cards is linked to a bank account. The bank account that the money goes into when somebody pays us, that's where they're going to take the money out when they win a chargeback, right? Or when somebody first issues a chargeback. Like Matthew said, they take it out immediately. So what's going to happen, this money, if you remember, I took the payment and put it into Continental Bank. The first thing that's going to happen is they're going to take the money directly out of Continental Bank. Now, in this example, I'm going to keep it simple. Keep in mind that chargebacks, like refunds, may get grouped with other payments you received on that day, so you'll have to sort of reconcile it with whatever else was funded together with that chargeback, which makes the accounting really fun. But that's what you have to be aware of. So oftentimes when these things happen, you'll need to go into your merchant account and actually look at the details to see what that chargeback got included with. And this is where, and I've got a video on this, you could wind up with a negative deposit. If I have a $5,000 chargeback and only $100 in payments received that got funded together, the way that comes through is essentially like a negative deposit of $4,900. It's a payment net $4,900, and you have to know what those details are. You have to know that really that represents $100 in payment received, right, minus $5,000 in a chargeback or a refund. So this can get really tricky. For today's purpose, obviously, I'm going to keep it really simple. So the payee, when I record this, is going to be the customer. I definitely want this associated with the customer who issued the chargeback, right? Because then here, it's going straight to accounts receivable, right? And I'll just put a memo, customer chargeback, right? There's probably a reference number, which I'll put here because I want to be able to create the audit trail so that I can easily log into my merchant account when I'm looking at this and trace through and get my documentation. At this point, I'll probably take all my documentation proving that this was legitimate and attach it here, as well as upload it to my merchant processor to prove it. But this way, if the merchant processor comes back and asks me to resend these things, which happens all the time, I have it right here at my fingertips, right on the transaction, right? So I'll upload it in both places. This way, it's at close reach if I need it again, right? And the amount I'll say is $5,000. Now, Alexa confirmed that apparently what QuickBooks Payments does when somebody issues a chargeback like this is they might charge you a fee of, let's say, $10 or whatever it is. So if that were the case, then what I would do is I would book that to bank service charges, right? And just add that as a line item for $10 if it's part of the same transaction. If there's actually a credit out of my bank account for $5,010, right? Oftentimes I've seen, and depending who's processing it, it might be done, either together or in two separate transactions. So obviously, however they do it in the real world is how you record it here. If it's all in one transaction, I add a line item for the $10. If it's two separate transactions, I record two separate transactions. If it is two separate transactions, when I record the $10 service charge, I'm going to also associate that with my customer to make sure that I tack that on to what they owe me, right? There's no way I'm paying for that, especially if it is, in fact, in bad faith, if that's my opinion on it, right?
Seth, one other change that recently happened that could be impacting people. Stripe recently changed their procedure that if there's refunds or returns gone through an account, they used to also refund the merchant processing fee. So you'd have, you would get the money of the fee back. That has now stopped or is about to stop. So if you deal with Stripe a lot and you're having the refunds come through your account, you'll stop seeing that, and that can actually impact your bottom line. So just be aware of that.
So that's interesting. So that's exactly, I was talking about PayPal before, saying how PayPal does give you back the fee. So just for anybody who is listening, what that means is that Stripe used to do that, now they won't be, which is interesting. Now what happened to my chat window? I'm looking for it. There it is. It's weird how that hides behind my windows. Okay, so we have this, and so what's going to happen is we're putting this on accounts receivable for this payee by recording it this way, and so then you're going to see that this is going to show up on a receivables report, and it'll look a little interesting, right? If I run my Open Invoices, because you'll see an expense transaction type in an accounts receivable report, which is a little unusual, but it tells the right story. I look at this and I understand, okay, this is money that got taken away from me that this client now owes me. Now, some people would do this a little differently. They might post another invoice for the $5,000 to do it. It's a little extra, it's some extra steps that way. But I like this way of doing it. Normally, I'm the first one to say I don't like seeing a transaction type that's not normal showing up on a report like this, right? I talked about this last week, where if I'm auditing a commissions expense and I see, expense, deposit, expense, that's bad from an audit trail standpoint, because that deposit item is going to stand out. Here is, I guess you could call it an exception, where normally I would not like to see an expense transaction type in an accounts receivable based report. I normally should only ever see invoices in here, right? But here I want this to stand out, because I want it real clear that the reason this is here is they took the money away from me, right? It's very different. An invoice tells me the story that I simply charged them for something and they owe me the money. This tells me the story that that part happened and now they've taken the money back, right? I want to see this.
Does this type of transaction get included when it calculates days to pay, like for future considerations for clients?
Probably not, because there's no due date associated with this, right? So again, if that's a concern of yours, normally I never care about that. I have a good sense of who pays, well and who doesn't. But if that's a concern, then you can absolutely just do it as an invoice instead, and then you have a few extra steps to perform, because, if you do it as an invoice, you still have to deal with the fact that the money got taken out of your bank account, which has nothing to do with the invoice. So
no, but you could actually do an invoice with an item that goes back to the bank account or credit card or whatever.
Right.
So I have them set up as like a charge.
If I do an invoice, I'm debiting accounts receivable and I'm crediting whatever's associated with that item. So that absolutely would work, and it would work well. So just so people can see clearly, that difference. But then it won't. Well, yeah. Then it'll show up in AR, because they'll show you. All right. So let's do that. I actually like that idea. The only downside to that is if you have multiple bank accounts and this happens on more than one bank account, you need a different item per bank account to accomplish this. But let's show you what this looks like. So I'm in the wrong thing. Let's go to customers and let's.
And then that way, when I get a chargeback from a credit card or my bank will charge me, say, $12.
Yeah,
but
you can.
Sure, shooting in my agreement, it's a $25 to $50 charge.
Yeah, exactly. So over here, we can call it chargeback even, but I would name it according to the bank account that it's getting associated with, right? So I'll call it Chargeback Continental. Okay, and then we can I didn't want to do that. Go away. Service. And so this gets associated with the Continental bank account, right? And then we can put a little description here saying chargebacks issued against Continental Bank. Let me spell that right. Okay, save and close. And so we'll say it's the whole 5,000. And then if there was a fee associated with it, we'll create an item called bank charges. Here we only need the one. This doesn't need to be bank account specific. Again, a service item. And the income account, I hate when it does that. Bank service charges as an expense. I'll just create that real quick. I guess I didn't have that on these books. Expenses, bank charges, save and close, and save and close. And we'll say that, and we charge them $25. We don't care what the bank charges us. We're charging them $25 because it's not just that we got charged the fee. Now we have to spend time processing this, right? We have to create this invoice, and that takes time. And so this is, you know, I'll be honest, I like this way better than my original method of doing it with the check, right? Because you do this way, you do have the tracking. This invoice date, you might even want to backdate it to the original invoice date where the money got charged back, because in effect, it's like they never paid you, right? So it really should, time-wise, days to pay-wise, it should line up with the original time that the invoice was created and what the original due date was, not the date of the chargeback itself. Basically, we're saying, hey, client, you took the money back from us. It's as though you never paid us, and that's what we're doing here. We're setting it up. What I would probably also do is, you know, in the memo here or down here, I would put some kind of a reference to the original invoice, and probably put the URL, this is what I love about QBO, probably put the URL of that transaction somewhere in here so that I have an easy link between the two transactions, so that when I'm, let's say, going over this with the client and saying, hey, you took the money away, you still owe it to me, and they say, well, what were the original charges for again? Because now it's 6 months later, and of course nobody remembers. So now I have an easy trail, right? It's really just, it's an audit trail, just the same, back to the original invoice. So I can say, oh, well, you know, here's the link. Let me just go over. I'll get to that invoice and I can resend them the copy of the original invoice.
I actually include a PDF attached to this, and then at the bottom where it says you can have it sent automatically to email to them as well.
Brilliant. Yeah.
The attachments.
That way
And
the
then I
PDF.
also allow them the opportunity to repay me by credit card, whereas you can't do that with an expense transaction.
That's true. That's true. So yeah, you can use the if you're using QuickBooks Payments, what you might want to do, even though we've established today that ACHs can still get disputed, it seems to me it's easier to dispute a credit card. So I might not give them the cards option. I might only give them the bank transfer option. I feel like it's still going to be harder for them to dispute that one, right?
Okay, we're going to stick Tiffany on everyone. She's going to go after them.
Perfect. And Tiffany's the right, well, all right, so Tiffany clearly has experience with this, but I also want to stick Shannon on these bad faith clients because, you know, she's got the company that sells the products we need that John Wick uses to go after these people. And we're going to hire John Wick to do our collections. All right, so if I save and close this one, there we are. And now I have, yeah, all the way around. I'll admit it. I like Tiffany's way better than mine. This is how I'll do it from now on. Matthew in the chat says, Tiffany's got some smarts. She does. Tiffany's a very, very smart person. So this way is much better because now I'm seeing what I expect to see, right? Which is an invoice in an accounts receivable report. And I can always click through here, you know, to get the details and get the right story told that it was actually a chargeback issued. The other thing we could do is we can customize this report. And let's try and get the memo showing up here. There. Okay, and this will bring up an interesting point. So here's the memo description. Notice nothing shows up there because that doesn't come from the line item detail. It comes from this one, I believe. Let's test it. Nope, not there. Isn't there a memo that's supposed to show up there?
Show up where?
At the summary level right here.
Try the message on the statement section.
Yeah, we'll try that. It's the only other place that it could
That's
be.
it.
Matthew, you were muted.
There it
I
is.
know. I was talking to myself. I do that a lot.
There it is. Charge. Okay, so you need to use the statement level memo so that it shows up here, and then tweak this report as I've done to include it. Of course, we can move this so that it's not all the way on the end because that kind of looks weird.
So how does that work with the memo again? I know one only shows on the balance sheet, one only shows on the income statement, and
I don't know about any of that, but we just confirmed that if you
Right.
want the memo to show up on this report like this,
you have to
then you
enter
use the
it in last
statement
place
level
you-
memo on the invoice form.
Right.
Right, the balance sheet itself is not going to show any memos. It's strictly a summary level report. A detail report will show the line item memo, right? This is the stuff on the line items that shows up in any kind of transaction detail report, always, and that goes for any type of transaction in QuickBooks, right? These detail line items show up in the transaction detail at the detail level. Right? The summary level would be, I thought it might be this, but this is just a message for the invoice. The message on the statement, I guess, is really the global memo, right? A lot of times the nomenclature is a little confusing about this stuff. I guess the intention is that this would normally show up on a statement.
Statement, and reports. Right?
Yeah.
So is that where you would link to the original, also post that original invoice so that on future reports you'll always have quick access to that original invoice?
You're still not going to be able to click on it. Remember, it's not going to be clickable. I wish they would fix that and allow hyperlinks to render like in a comment or a text box in QBO. That would be awesome if they did that. So you're still going to have to click through so you can copy and paste it. So I think I'd still be inclined to put that URL here. But you can certainly put it in both places. At that point, I don't think it matters, I guess is what I'm trying to say.
Or attach the PDF to the invoice there.
Yeah, or like Tiffany said, attach the PDF, but I still also like being able to have a quick way to click over or get over from, this transaction to the actual source, right? Alexa says you need a description for the bank charge depending on your invoice style. Product might not show up. That's true, and I may not want this to show up, on the invoice that goes out, But that's probably a good point about when you customize your invoice form, you can choose which columns actually show up on whatever goes out when you send things out to the client. So if you don't have this showing up, then you would need to put bank charges. I just do exactly what I just did there. Just copy and paste it. So it's redundant, but this way, if you're not showing the product or service, this will show up if you're sending this out to the client to tell them, hey, now you owe us $5,025, right?
There is also a discussion that needs to happen about the invoice date, because if they are if they're doing a chargeback on an item that, say, August, that invoice is now overdue. You've got this invoice sitting here as a current invoice.
Well, no, you missed that part before then, because I had said that normally when I do this, I would backdate this to the date of the original invoice.
Right. Okay.
Yep, I just don't. Well, actually, I do technically have the original invoice, but I think it's all dated on the same day here. But yeah, that was the whole point, is that I would backdate it to the original date of the invoice because it's as if they never paid us, right? And we want it to show up that way.
I was
Although
busy
if
fixing
it
my
was
background.
Oh, oh yeah, you did fix it, huh? You're no longer the numb guy.
I'm no longer the numb guy.
I kind of liked you as the numb guy.
Although if it runs over a year end, you've got to be careful, because then your bank will be out of balance and your AR will be not reflective
Right.
at that point in time. But from an operational standpoint, this is a better method of doing it, and then it would just be done as part of the review for year end.
Another thing that people sometimes do is they'll reapply that payment of the original 5,000 to this invoice. Right.
Huh? Well, no, this invoice is open. They have to come in and pay us now, right? So now the other invoice is still closed, right? We posted the invoice, we got the payment, then they took the money away. It's a separate transaction. That original invoice is still closed, right? Now we have a second invoice that shows the balance, which when they eventually pay us again, will get applied to the newer invoice, right? Or did I not understand?
No, you understood. I was just going by what Intuit describes on their way of handling this.
Okay.
Don't forget that Intuit is a software company. They're
yeah.
not accounting professionals.
Yeah.
Exactly. The other thing to keep in mind is there are sales tax implications here, but they shouldn't matter here, right? Because if we got the original invoice and it was taxable for sales tax purposes, we collected and sent in the sales taxes. Now, when they issue the chargeback, none of that stuff on the chargeback related invoice is taxable. The sales tax has already been handled and taken care of, unless they end up never paying us and we eat it. Then we have to get the sales taxes back. But at that point, what you would do is probably issue a, a credit memo for the items that were sold so you can recapture the sales taxes, and that would have to be dated in the current period. Right? That way, in the current period, you kind of get the sales taxes back. The credit memo using the taxable items would result in negative sales tax, which is what we need.
Now, you actually want to make sure that that's broken out separately. If you're going to report it correctly as a separate line item on your sales tax, if we really want to get super detailed about it.
You
So how
could
would you do that?
use a different taxable item to make it clear that this is a chargeback. Although because you're not actually if you sold them a product, you're not actually getting that product back. It's not because they returned it. And using a credit memo for the original item sold would have the effect of putting that item back into inventory. So yeah, we would need a different kind of item to use that would also be taxable but wouldn't impact inventory, and would also make it clear what we're doing, that what we're doing is recording essentially a chargeback that we lost and we're never going to get paid for, and therefore we shouldn't be paying the sales taxes on it.
So this is a good public service announcement to the idea of why you should be hiring an accountant. Something as simple as people taking a little bit of money back from you out of your account requires all of these all these different complexities.
Yep. Now, Alexa's saying that Greg is right about what QB tells you to do. And I'll defer back to Tiffany's comment that, they're doing it from the standpoint of the software and not from the standpoint of accounting fundamentals. But Greg, just to clarify, what was it that you were saying Intuit was telling us to do here?
They tell you to take that $5,000 payment and apply it to the $5,025 invoice. Therefore, you're going to have a $5,000 unpaid invoice and a $25 balance due.
Oh, you're saying that you should take the original $5,000 payment and apply it to the second invoice that's actually for the chargeback.
Yeah.
Why? What's the logic there?
I don't know.
Yeah, that doesn't make any sense to me. What I would want to do,
What it does
would be that it gives you the proper dating on the original invoice.
well, no, because I would backdate the chargeback invoice to the same date as the original invoice. To me, that's the right way to do it. Again, for me, it's all about telling the right story with this stuff, right?
I can understand their point of view, though, Seth, because the story they want to show is that they still owe you the money for what the original invoice was for.
Right, but we're showing that by backdating the second invoice. And to me, the right story is I billed them for something. They paid me. Then they took the money back, right? Now I need to bill them again. To me, that's the right story, not the other way around.
Look at it like if a client were to pay you by check, when they pay it, they're going to reference a new invoice number, not the old one. So then if you have somebody who doesn't know the whole process, they won't understand that there's a connection between the two invoice numbers.
Right. And if and actually to that point, you could actually just use an appended version of the original invoice number to make it clear that they're related.
Like throw an A on the end.
You don't like that, Tiffany?
Well, that presumes that you have custom invoice numbers enabled too.
Right. Well, I usually do.
And that will mess up your continuous numbers if you don't put it back in sequence.
Yep.
Right. So then, whenever you do that, you'll have to know the next invoice you deal, you'll have to fix it. I guess that's why you don't like it, Tiffany. I guess if you're the only one doing the books,
it's better to have sequential numbers as opposed to back and forths.
That's true. That is true. But so you see what this would look like, assuming, it was later than today and this all happened back on today, right? So yeah, you're right. The original invoice was $1,009. This is for only $5,000. That's when we invoiced them for the service. Here's when they charged it back, right? And then so we go back to the same day and do the invoice for the full amount. See, to me, this is the right story. This payment paid this invoice. I'm sorry. This payment paid this invoice. Then they charged it back, and that's reflected here, right? The chargeback usually will have happened a little bit later. It seemed weird to me to take the payment from the original, payment and apply it forward. I do sort of, I get the logic, I just don't agree with it. Let's put it that way. All right, what else we got? We're almost done with the hour here. I'm surprised we actually managed to fill up the whole hour with this subject. I thought and just be clear, Linda's commenting the live chat on Facebook. She loves the URL tip. So just in case it wasn't clear, here's what I mean by that. Here's the original invoice. There's the URL. I'll copy that. Close it. Go into here. And I'll just add it right here. Original invoice number. I'll put all the information in here because it doesn't cost me anything extra to do that. It was invoice number 1009. I'll put a pipe in there, and then I'll paste the URL in, and a space and another pipe. And I'll explain this. I know Matthew will know exactly why I'm doing this. Where are you, Matthew? Are you still with us?
I'm in Ventura.
You're in Ventura. That's good. You know what? A better answer is I'm here, right? I'm here, wherever here is.
I'm
right?
always right behind you, Seth. I've always got your back.
What time is it?
That time.
It's right now, right? Where am I? I'm right here. We're getting very philosophical
You're
here.
using that as a delimiter, aren't you?
I'm using that as a delimiter. So in case I end up dumping this into some kind of an Excel file, it will make it very easy to isolate that piece of data and render it as a link that I can click on in a spreadsheet.
It's a good point. And actually, so CDAT, as you guys know, I love that app, pulls all this information directly into it. It would give you the whole column of all of those. So that's a great example.
Yep. So we save that. And now, so I won't see that in a report like a receivables report, but once I click through, see, this is what I wish Intuit would do. I wish they would make it so that this would actually render as a hyperlink, but instead you can highlight it like this. And if actually, you don't even have to copy and paste it. If you right click it, you can actually go to it. So you just highlight it, right click, choose go to. It will open up a new tab and take you right there. All right, now I'm using Chrome. I would assume it works in all browsers, but that might be a bad assumption, especially if you're using something like Internet Explorer. Internet Explorer is one of those where it's usually a really bad assumption to think that would actually do something smart like that.
That was a good nugget, Seth.
Thank you. All right, and then I love Tiffany's idea of taking a PDF of the original invoice and attaching it to the subsequent one. And Courtney in the chat says, and you can reference the original invoice number on the new invoice. Which, yeah, I did that. She might have said that before I did that. But I did do that, right? Yeah, right here. Yep. And pipes are great delimiters, by the way, because they're not often used. So it's if you have a list of data in a report, and you used a pipe as a delimiter, it's likely that, like using a comma, there could be a comma in a sentence that's in that memo field, right? So you can't necessarily rely on a comma being unique in your ability to use it as a delimiter, but pipes are very rarely used. So that's why I like using pipes as delimiters.
And a pipe, just to clarify, it's that straight vertical line.
Yeah.
You can do. It's above the enter key on your keyboard, shift above the enter.
I had no idea it was called a pipe.
Yep.
That's
Called
another
pipe.
awesome nugget.
Yep. Called a
Do
pipe.
that on purpose.
By the way, so here's another little nugget, and just so I can show you exactly what the pipe looks like and enlarge it. In Chrome, I can say docs.new. And boom, I'm in a brand new Google Doc. And so it's the shift and the backslash, right? That gets you the pipe. And I'll zoom in on my screen. Whoa, that's really zoomed in.
Nice pictures.
Thank you. So that's the pipe right there, right? That's what that looks like. So
Make an eye.
Seth,
what?
Make an eye.
Make an eye next to a pipe. Notice it's a little shorter.
Make an L, lowercase.
And a 1.
Lowercase L looks just like the I,
Exclamation mark.
and the number 1 is a 1, and then the exclamation mark, and then that.
And then make it red.
How about this? How's that?
I don't read that.
You have to make it red for Matthew.
Oh, you're so funny.
Okay, so it's 9:02 a.m. We took what I thought was only going to take 15 minutes, and we filled an hour with it. And now I'm going to go choke. Anyway, any other questions, any other concerns, any other comments, any other feedback, you know where to find us. Don't forget the next few weeks, we have some really cool topics. Again, next week is ClickUp 2.0, then Smart Contacts with John Ferrara, and then Scary Bookkeeping Stories on Friday the 25th, just before Halloween. So make sure you gather up your stories and scare us.
Seth, in the comments, Diane Mueller said, back up, Tiffany, what did you say about year end? And so all I was saying is that with Seth backdating the chargeback invoice back to the original invoice date so that you get the aging on that receivable, it's fine for like a process standpoint, but for a year end point, it would be affecting the bank account in the wrong period and affecting accounts receivable in the wrong period. So you would just need to kind of do an adjusting entry and then reverse it if year end happened to jump in between there.
That's true. What I would do in that case is actually create my chargeback item and map it through some clearing account. And then when the chargeback actually happens out of the bank account, I can record that as an expense against the same clearing account, and the clearing account should zero out. That way I can deal with it. The
clearing account would still need to get grouped in somewhere on the financial statements for year-end purposes. So
it would be a balance sheet account though, so it wouldn't matter.
It's still wrong.
What?
It's still wrong. Because as at say it happened December, say the invoice was December 31 and the chargeback was January 15th.
Right.
And the true payment was on December 31. Then,
I see. It's sort of like an outstanding check.
Correct. And it would be incorrect for year-end purposes, but from an operational standpoint, it makes sense.
That's true. But if you run it through a clearing, because I guess it's...
clearing account needs to get grouped. It would get grouped in with the bank.
Yeah, that's true. That's true.
You would just do an adjusting entry and then reverse it on Jan 1.
Well, that's annoying, but hopefully you don't have too many of these.
Hopefully you don't have a policy in place that allows for this.
Well, you can't really prevent it. You can't prevent somebody from charging back.
Customer service, maybe.
What?
Good customer service, or making them being the one who are initiating the payment rather than you pulling the payment.
But even then, I mean, look, my website, everybody has to initiate their own payments, and it's been very rare, but I've still gotten chargebacks. I had one, it was actually a consulting customer. I was shocked. This was a customer who was local. I showed up at his place. I did the work, and he had paid me for it, and then they charged back the whole thing. It was like $1,500. And I went back to him, and I know that my charges show up on people's statements as Nerd Enterprises. It's very clear. Like sometimes I get it, and it makes me crazy that merchants don't take the time to set up their accounts so that when the way it shows up on people's statements makes it very clear who they are. I get some of the weirdest junk on clients' bank statements on that. And I tell the clients, just charge it back. It will flush them out and force them to let you know who they were because they legitimately don't recognize the charge. And to me,
so you're
horrible.
One of the ones who are making it a problem.
Well, no, I'm making it a problem in that case because in that case, somebody hasn't taken the time to do it right and set up their merchant account so that it's very clear who the charge is from, right? But mine, it's very clear. It says Nerd Enterprises. And so when this guy charged it back, I was not only shocked, I was kind of pissed. And I wrote him, I said, why would you guys charge me this money back? Right? I mean, you know I provided the service. You know who I am. You know, we're local. I've come to your house because his office is at his house. And he wrote back and said, we didn't recognize the charge. And it was BS. It was just total BS. I got so mad at the guy. And I actually dismissed him as a client after that because I really felt it was some kind of bad faith.
You know what you could do is on either your receipt template or on your invoice template or your sales template or all of them, is if there's a slight variation in the name that's going to be showing up in the credit card statement, is just have it stated on your documentation that goes out to the clients.
Yeah. But again,
Because that
however,
is true. I mean, there are legal names. Like I know companies that the payment processors will only allow them to use their legal, not their operating name. So it could be 12345 Ontario Limited, but they're actually operating as Joe Smith Incorporated.
but usually there's enough space that I think you can even put DBA and then whatever you're operating under. You know, they give you enough characters to do that with. You know, there are definitely ways to make it clear, or make sure you put that name on the invoice that they've paid, so that there's again, it's all about an audit trail at the end of the day. It's all about being able to get to that final endpoint of the transaction back to the source and making sure there's a clear trail of information that makes it easy to link from the endpoint back to the source. That's what an audit trail really is in my experience.
Real quickly, I want to highlight for anybody who missed it, what they're talking about is most merchant processing companies give you the ability to go in when you're setting up your account and clearly define what you want to show up on that bank memo.
Mm-hmm.
Imagine if the whole world played nice like that and we all put stuff in to the bank memo. It would just be so nice and so easy to create rules and categorize things that way. So put your name in or your phone number, make sure it's at the beginning of it, and you're helping everybody out.
Yeah, so that at least somebody can call and say, hey, I got a charge from you, I don't recognize it. Or chances are the second you answer the phone and tell them the name of your company, they'll be like, oh, well, that answers that. Although it should be clear without needing the phone number even, although I agree it's a good idea to have the phone number, it still should be clear from, like Matthew said, from the information that you have the opportunity to decide what goes there. Stripe is a good example where they make it very clear. What would you like to appear on the customer statement? There's a box, right? It couldn't be more explicit about where it is that you go and make sure that you know it's going to show up properly on their statement. So anyway, it's important.
We like to put "Give me my money, please" right there.
Right. John Wick's in his it says Murder Incorporated. Good old John Wick. I wonder what Keanu Reeves would think if he saw these weekly videos we're doing.
I wonder if Bill and Ted ever went into the future instead of into the past and would have known he would have become John Wick.
That would be a funny movie to do. Anyway, our time is up. Therapy is over. Financial accounting therapy has completed. Hopefully you're all cured now. Don't forget to join Gina's Hangout later today. Join her, SBAA, Small Business Accounting Advisors, on Facebook, and she will guide you into her webinar later today. They meet at 2 o'clock to discuss what will be discussed, and then they discuss it at 2:30 live on Zoom.
Always.
Just like you.
And we have fun too.
Always
and they have fun. We don't have fun here, but they have fun. Here it's all business.
It is 5 o'clock somewhere.
That's
All right, Greg, go get a drink.
I meant at 2 here at 5 o'clock.
It's afternoon here, Greg, where I am. So you're welcome to hang out and have a beverage with me.
By the way, going back to the year-end thing, Diane Muller says, Murphy's Law, it will happen at year-end.
And I want to say we had 2 background fixes happen. I like Greg's and I like Laura's. I like this background a lot better, Laura.
Thank you. Better than what? I have so many choices now.
Better than the beams coming out of your head.
Okay. How about orange?
No.
There's less shimmer on the orange.
Not that one. Oh.
That one, right there.
So the blue starburst one, though, your logo.
I know. Well, I'm gonna ask my friend to fix that for me.
Your friend's gone already.
Matthew left?
Yes.
Bastard. It's all right. He just sent it to me on Facebook during the meeting, so.
Oh.
I know. I owe him big time. He's such a sweet guy. So.
All right, everybody, I got to get out of here.
Bye. Thanks, Seth.
Happy Friday. Happy weekend, everyone.
Bye.